The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 17th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who believes we should always be pioneers of our future and never, ever be prisoners of our past. So let's make sure that you and I do everything in our power today to pioneer ourselves through the day, and always remember that life happens for us, not to us. And that is the way to live, folks. And when we do that, we can find a gift in any set of circumstances that life hands to us. Yes, circumstance, it's like the wind. I say plant a good sail and let that wind take you to your journey, to your destination. And thank you for letting TFNN be your destination this morning. Hope everyone out there had a great weekend. I know I did, and I am grateful for your presence here today. Of course, I'm here to serve you. That means all you need to do is pick up that phone, give us a call at 877-927-6648. Internationally, you can reach out at 727-445-1044. That way, you and I, we can go check out the markets. We can go hunting. I believe hunting season is open, so we can go looking for bulls and bears out there. It is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. Dow futures trading up about 36 points, trading out at 17,567. S&P futures off 5.5 points, trading at 2,032.50. NASDAQ down 7.5, trading out at 42.14. Russell off a couple of bucks out here. King dollar up 15 pennies right now. She's trading out at about 87.75. We'll take a look at the currency pairs out there. It'll be interesting to watch the Great British Pound. Gave us a nice little reversal signal on Friday. We'll see if that level will hold. Goldilocks back $2 right now. She's trading at 11.83 after a big Friday session out there. Silver off 25 cents this morning. She's trading out at 16.06. Light sweet crude is off about $1. Down trade down at 74.86 out here. Natural gas up about 11 pennies after a cold. Well, some of those football games were pretty amazing out there. How about those? How about those Packer fans? Is that extraordinary? I mean, in the cold, and they're loving it out there. I don't know. Not something that I could handle, that's for sure. Hey, let's take a quick peek across the globe out here, see what we've got going on. I believe the DAX basically flat out here. If I'm not mistaken, the DAX is up 3 points, so we call that flat. FTSE is off 10 points. We'll call that flat. Not flat. In the Asian market last night, the Nikkei down 517 points. That's a roller coaster ride out there. Of course, they slipped into recession. The Hang Seng off 290 points. That was off about a little over 1.25%, close to 1.25%. The Shanghai down 5 points. Not a big deal out there. Let's take a look at the DAX. Let's just see what's going on in its trading out here. So we'll put the DAX up on our screen. If you're listening on your radio, your mobile device at tfnn.mobi, thanks so much for doing that. Don't forget you can get the live stream of this by going to the homepage of TFNN.com. In fact, in the upper right-hand corner, you'll see the show actually streaming live, or you can just get the full screen of it on your mobile device. Just click on that little button there with the 3 smartphone devices and get that app on your phone. If we take a look at the DAX, we can see that it's off of its session lows out here. Now, the DAX much weaker than the U.S. markets out here. What that says to me is that any kind of fall from grace, and the European markets will probably be the ones that are hardest hit out here. What I mean by that is if you take a look at its swing point from September 19th, of course, you know that our markets inside the NASDAQ, the S&P 500, the Dow, they each made a swing point high on September 19th, no different than the DAX. Of course, our markets, just as the DAX did in Germany, it made a swing point low back on October the 16th. Well, from high to low inside of the DAX, it's only made a 0.786 retracement, just slightly. Well, hasn't even actually made it up to the 0.786 level, but we'll give it that credit out there. Much weaker. Our markets are above September 19th. maybe pulling back to September 19th as we come into the end of this week, maybe even the end of next week out there. We'll just have to take things one memento at a time out here. But no real reversal signals, just a market that continues to consolidate consolidate at its at these levels. We won't call it at its highs out there, but that itself is not unusual. Of course, on October 31st, as the markets had gapped up off of the news that so much stimulus was going to move forward in Japan, I was saying, hey, these markets are going to trade sideways for a couple weeks. They're going to be extremely frustrating for both the bulls and the bears. There's going to be days where the bulls think they've got the upper hand, then all of a sudden the bears will step in. They think they've got the upper hand out there, and the reality is nobody has an upper hand in a consolidation market out there. What you want to do is be able to spot those consolidations as soon as you can. Then, of course, what we know is that when consolidations do break, they will be a measured move, a move equal to or greater than the actual consolidation box out there. And that's what's going on inside of the DAX. If we take a look at the FTSE out here, the FTSE itself, if we take a look and measure its strength or weakness, and we just simply come off of its swing point, which would be September 4th. So the FTSE has more of a look and feel to it as the Russell 2000. I believe it was the Russell 2000. It's Russell 2000 or the New York Stock Exchange. May have been both, by the way, that put in their highs on September the 4th. Now, in the case of the FTSE, she's traded above the 0.618 retracement level. It's kind of been more of a gradual climb higher out here. The FTSE suggests here, without any kind of reversal candle, that it wants to make a move up to about the 67.26 level. You're trading at 66.44 as we speak right now. Let's go take a look at. Let's take a look real quickly here at the Nikkei. Then we'll go switch over to our markets, see what is going on. If we take a look at the Nikkei out here now, let's take a look at and see what kind of expansion or any kind of A to B equals CD pattern. Do we have that? Yeah, we've got that. So we take a look at the. We take a look at the A to B equals CD pattern that is likely going on inside of the Nikkei. The A point I'm going to use is back down here. I'd have to say the April 14th low is really what ought to be used. So if we use that as our A point, our B point really should be the swing point out here from, looks like September 25th, and your C point all the way down here on October the 17th. So it's made the 1-to-1. It looks like our S&P 500, it's made almost the 1 to 1.272. So it's expanded. I think it's expanded beyond our markets out here. This trading session out here, kind of it's the evening star formation. Says you got some real resistance at Friday's highs out there. We'll have to really pay attention to what's going on inside the currency pair. So if we have to pay attention to what's going on inside the currency pair, let's flip over to that. Let's go take a look at the Japanese yen out here, trading down about 6 cents right now. Do we have anything that's significant inside this? Well, if we take a look at its A to B equals CD pattern, you can see how closely the currency market here emulates the stock. In this case here, the stock market in the Nikkei, it's made a 1 to 1.272 A to B equals CD to the upside. No reversal signal here just yet. Today could be a key reversal session inside of the Japanese yen U.S. dollar currency pair. We'll have to, we'll check into that on Monday. The reason why it could is because you're in extended condition. We've got the high and low exceeded from Friday. That was exceeded here today. At this stage, it's a little doji candle. It's trading right where it opened last evening out here. So that alone could also signal, not a reversal signal, but a signal that the market is tired out there, and that's what's going on inside of that currency pair. Of course, as long as we're overtaking a look at currency pairs, we ought to go take a look at your friend and mine. That's the Euro-Japanese yen out here. The Euro-Japanese yen having made a 100% move of a move. You might say, what the heck is that? Well, that's where price gets all the way back to a previous swing point, a significant swing point. In this case here, that's the December 27th high out there. That's at 145.68. So the Euro-Japanese yen made that move. It did it on Friday. Last night, it moved a bit higher. Then they got the bad news bears out there that the Japanese government, that all that stimulus at this stage here has not put Humpty Dumpty back together again. They'll continue to try to do that out there. And at this stage here, the Euro-Japanese yen has made a 100% move. If it's unable to move higher out here, that ought to put some selling pressure inside of the U.S. stock markets. Selling pressure that I expect will stay in place until we see some kind of retracement in this currency pair. That retracement could take you down to maybe the 141.76 level. That would be the place I would first be looking at. Of course, just a normal retracement takes you to 138.82. We'll continue to track this currency pair, and the reason is because there is no other currency pair out there that tracks the U.S. stock market better than the Euro-Japanese yen. Of course, as long as we're over here again, let's go take a look at the euro. Now, those two currency pairs, when I'm in this section looking at the currency pairs, I've got just about a 10-minute delay on our charts out here. But as we take a look at the euro out here, trading just slightly, just pulling back just slightly here this morning. We know that this currency pair is doing, it's the pound we want to take a look at. This currency pair out here is trying to form a bottom in the marketplace. And as soon as it does that, if you think there was an acceleration on Friday inside of the metals marketplace, you ain't seen nothing yet. Who sings that song? I can't remember who sings that song, but not Bachman Tuner Overdrive, is it? No. But maybe it is. In any event, I can guarantee you one thing. When this currency pair, and if this currency pair takes off to the north, you'll see a huge acceleration in Goldilocks and silver. Now, it was a Great British Pound that I mentioned that actually gave you a fairly decent signal out here. I was looking at the futures market. Yeah, it was Randy Bachman. Thank you there, Alberto. How about that for just a music memory out here? If we take a look at the A to B equals CD down pattern inside this currency pair, the 8-point, just the smaller one is what I'm looking at. I'm using the 8-point out here on the September 19th. The B point I'm using October 6th. The C point being right out here on September the 9th. What you'll see is a 1-to-1 A to B equals CD that was completed. And this was completed here on Friday. And you'll pay notice, and you'll see that that's a little hammer candle that is out there. That says that the low here from Friday is very significant for the Great British Pound. You see it close below 1.5593. If you're long, you're wrong. Now, we have not had any kind of follow through to the upside inside of the Great British Pound. However, price has pulled back almost really into an area where at the completion of a pattern, it would be worth a shot if you were trading the currency pair. Of course, let's take a look at an intraday chart out here. Let's go see what's really going on. We'll use a 30-minute chart out here. Let's go see what is happening. So it did not complete. I don't see the completion of the A to B equals CD pattern to the upside out here. All that we've got is really a retracement of the low out here from Friday down to the high that was put in. Looks like this was put in here last evening. So, yeah, it's made a nice 0.786 retracement. Actually, it's come back and tested the top of that swing from November 14th out here. So this could truly be the formation of a larger A to B equals CD to the upside. So we've got the signs, you got that hammer sign at the completion of a 1-to-1 A to B equals CD to the downside. Right now, the ES Mini, she's trading off at 2,032.50, off about 5 points out here. This is the 30-minute chart. Let's go switch over, take a look at the let's take a look at the 30-minute chart. As long as we're here, let's go take a look at it. Key levels to be watching inside of the ES Mini today. Well, that's pretty simple. 2,039.25 to be specific. You get above 2,039.25, and that's a message that the market wants to motor on higher. You're trading at 2,032.50 as we speak right now. That becomes the PS de resistance. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. No real changes out here inside the futures market. Had a request to go take a look at ResMed Inc. Ticker symbol is RMD. So let's go take a look at this for our man Alakazam out here. Give me a moment to, I know what I wanted to do. I wanted to go ahead and get this tool up on the screen. We're going to first do and take a look at this equity. I'm going to turn a couple of the indicators off out here. Let's turn that off, we'll leave the volume on here, and I'll go ahead and turn that off as well. So if we take a look at this equity, you can see that it's got a huge supply line that it, in essence, is dealing with. What I mean by that, if you take a look at a couple areas of resistance, this had a horrible gap down on the trading day of October 25th, 2013. I don't know what happened there. It must be, maybe, I think they're in the medical business, so I don't know if it's a drug-related issue, but who knows what. What we do know is this: 6.8 million shares to the downside on October 25th. That's also considered volume off of the highs out here. And then the stock would have made a lower low down here in February of 2014. So just like our markets did, February 3rd, 2014. 2014 is when ResMed made its lows out there. Since that time, it's gradually moved higher. Have we seen any signs of strength in this thing off of the bottom? The answer to that question is really no. We have. Well, I take that back. We've seen one relatively small sign of strength out here, and that was on the trading session of October 24th, 2014. It moved higher. It gapped up with 2.9 million shares. So in the case of ResMed, it's got some really significant, it's in a turbulent zone out here. 55.86. It would do itself justice to close that window. That means you need to close above 55.86. Otherwise, this could be just simply a consolidation pattern out here. If I put this on a weekly chart, let's see if there's anything else that really sticks out at us on a weekly chart out here. For example, was it a high volume high weekly out here? And it was. So you got a big, huge key reversal session. So the daily chart where we saw that big gap down, which we did out here, volume off the highs on the daily chart, big wide price spread, big huge bearish engulfing, evening star, the whole 9 yards from a week. It also has it's also a high volume weekly out there. So at some point in time, ResMed should close that gap at 55.86 and go test those highs out at 57.34. That was ticker symbol RMD out there. Now, other things here, let's see, that are moving in the markets this morning. You've got Allergan. That is AGN is a ticker symbol. She closed at 198. She's trading out at 209 out here. Let's go see what 209 is going to take it to. You're already at 50 at all-time highs out here. So this is just simply going to be moving higher to where I can't really. This is a weekly chart that we're looking at on my screen. The A to B equals CD pattern would be a real moonshot out here, and maybe that's what's really going on inside of the equity. You've got, let's see here, Tyson Foods. Let's go check out Tyson Foods, the chicken farm company. Of course, they're not just into chickens, but certainly they have got lots of chicken barns out there. This thing here today, let me see, where was this trading at? TSN is a ticker symbol, by the way. Tyson's trading out at 42.01. Looks like they're out with their numbers as well. Let's go take a look at it. 42.01 is just simply going to take it. Let's go come back to the daily chart out here for Tyson. It's going to take it back above last week's swing point. That is the high from November the 5th out here. That high is $42 even Steven. This thing, where's this thing headed to? Where is this thing headed to? If it can clear that swing point, it ought to nope, nothing really. So Tyson Foods ought to go make a run for its highs out here, April 1st, 2014, right around the 44.24 level. Let me see here. What's moving to the downside in the pre-market out here? You've got Micron Technologies. MU is the ticker symbols. Micron right now trade out at 31.75. 32.62 is where it closed on Friday. So 31.75, where is that going to take us down to? Well, it's going to take us down into this little junior swing point from October 30th. That's at a price point of 30.94 is the low. 31.75 was its open on that trading session. 26 million shares down there. Now, Micron Technology, what an unusual stock here. It has both an island top and an island bottom. The island top formation, that took place right here on the trading session of July the 16th out there. So there's your island top. Of course, it has not been able to take out that high. That is some very significant resistance. That is at 34.85. Likewise, got a nice island bottom. That island bottom formed over the periods of October the 10th through October 20th. That's what set up the island down there. So it looks like really Micron Technology inside of a little consolidation pattern. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got down 12 points straight out of 17. 622 S&P off a couple points, trading at 2,037. Composite off 10, trading at 46.78. Russell 2,000 down a point, trading at 11.72. The DAX off 12. FTSE down 7. Lead the charge to the upside is Allergan. It's up $13, up about 7%. Activist ACT up about 3.5%, up $8. Baker Hughes combining with Halliburton. That is why that stock is trading to the upside. Xterran Holdings up 10%, up $3.60 out here. Celldex Therapeutics up 20%, up $3. Hasbro up a couple of points. Tyson Foods up $1.89. Tata Motors up $1.76. Visa up $1.85. To the downside, LinkedIn leading the charge. LNKD off $5, down about 2%. Halliburton off $4. DreamWorks Animations off 15%, down $4. That's DreamWorks is trying to combine with Mattel, is that it? I think so. I think it was Mattel or Hasbro. Maybe it's Hasbro. Hasbro and DreamWorks is one of those two. Baidu to the downside, up a couple of bucks right now. Amazon down $1.25. John Deere and Company, that's off 2% this morning. Gilead Sciences down 62 cents. No big deal out there. Let's go take a look at some of these equities and see what they are doing. Don't forget our call number is 877 927-6648. Let's go check in on LinkedIn, see what she is doing. $4 and change here this morning. Not that big of a deal, really, if we take a look at LinkedIn. So LinkedIn had a nice little sign of strength out here. Wide price spread, accelerated volume. That was on the trading session of October 31st out there. Volume to the upside, 6.9 million shares. This should have some pretty decent support down at about either 218 or all the way down to the breakout session, which would be 203.74. So trading down a few bucks, not that big of a deal here this morning. It does have resistance at 238.77. That's its market profile high out there. But otherwise, LinkedIn, if I put this back on a longer term basis, let's do that. Let's put it on a weekly, get a feel for what LinkedIn might be trying to accomplish here. LinkedIn is headed for the swing point. Looks like it should be headed for this swing point out here. And that is from September the 9th, the week of September the 9th. 7.3 million shares are up there, the blow of which is 247. 7.3 million shares a couple weeks ago was moving up with 13 million shares. Yeah, I would say LinkedIn is on its way up to test out those highs, somewhere between 247 and 257 and a change. Ticker symbol LNKD. DreamWorks Animation, DWA, is a ticker symbol down 15% this morning. Let's go see what this thing is doing. I don't know if talks are off or what the deal is, but, that's the way that typically merger buyout talks go. If we take a look at DreamWorks out here, just gapping down this morning. This thing has had gaps to the upside, to the downside out here. It does have, if it does crack 2172, it probably goes down and tests this high-ish type volume low from July 30th. That's out at $19.20 out there right now, trade at $21.93. That is ticker symbol DWA. Illumina, ILMN. That is the ticker symbol, down about $2 off, a little bit over 1% here this morning. As we take a look at it, let's see what it's doing. So this thing had a nice little sign of strength here, really wide price spread, does somewhat accelerating volume. That was on October the 21st. Now price is pulling back into that swing point. That swing has 3.6 million shares, pulled back on Friday with 1.8 million shares. So far this morning, 122,000 shares. Lumina could be, if it continues to pull back, if it can close below the low of October 21st, 174.01. Right now, we have to assume that is going to be your support area. A close below that, it should pull back to its breakout session. That's where you'd be looking for a buy if it is pulling back on light volume. A little bit concerning was that the volume was accelerating to the downside here on Friday, so we'll have to watch this. But your buy on Illumina at this stage here, I would say, as a result of Friday's session, I would have to say right around the 161-ish, 166-ish type area. Again, ticker symbol ILMN. Let me see, is there any danger signs out here on a weekly chart for this equity? And the answer here is no, not really. No, not at all. And this thing is up at, kind of its all-time highs out here, which took place that week of October 27th. Let's take a look at also moving out here this morning. Let's go to the upside. Did we take a look at it? I don't think we took it Allergan, did we? No, we did. We took a look at it right off the bat out there. Hello? Wake up. Is anybody home? Let's go take a look at Activist. ACT is the ticker symbol. This is the weekly chart for this equity. This looks pretty good as well. Here's an indication, kind of similar to the chart we looked at for Illumina. Again, this is a weekly chart, but this had a nice little sign of strength out here on February 17, 2014. This on a weekly basis. 34 million shares. The upside, it came back and it tested the breakout area, which was the low of the session from the weekend of February 10th. That had 5.9 million shares. It pulled back with 22 million, then 9 million, but really that was going against 34 million shares. And then, ba-boom, off to the races out there. That is on ticker symbol ACT. Let's take a look at Zillow. Z being the ticker symbol. This is up $4 here this morning. Let's go see what Zillow. Now, Zillow has a high volume high out here on a weekly basis. That says that Zillow wants to go test that 164.90 level out here. Let's see what this has done here on a weekly basis. We see a bit of a retracement for sure. Our retracement was coming down into what was supporting this out here? Really not other than, let's take probably a retracement level, huh? If we go from the retracement low, the swing point low, December 2nd, 2000. Well, that didn't work real well. You got to actually use the tool. If we take a look at the low from December 2nd all the way up to the high out here on July 28th, yeah, it just about a 0.786 retracement out here. Let's take a look at the daily chart. Get a feel for what Zillow is doing. Okay, so the daily went ahead and completed a 1. How about that? 1 to 1.618, A to B equals CD to the downside out here. That was the coming off of the swing point high from July 28th. That was your A point. Your B point was down here on August the 12th. Your C point, a 52% retracement out here. That was on August 25th. Your 1 to 1.618, A to B equals CD. That had a price projection of 93.85. It actually got down to 94.23 out there. Not too shabby out here. Then we had a little. Let's see, what do we have out here? Any kind of real signs of strength? Now that's the danger inside of Zillow, is that the low when it created that 1 to 1.618, A to B equals C. He's got 1.4 million shares to the downside. Friday, not a bad showing, 2.6 million shares, 4.5 million shares to the downside. I don't know if I said 4.5 or 1.5, 4.5, 2.6 on Friday out here to the upside. And this morning about 300,000 shares in just 12 minutes of trading. Not too bad for Zillow. Zillow does have that high volume high that it wants to test out here. That is where she is headed to, ticker symbol Z. Let's take a look at John Deere. DE is the ticker symbol. You got John Deere trading off $1.50 right now. Let's go see what John Deere is doing. This thing has a high volume-ish low down here from October the 8th. John Deere could be headed down to that area. 81.43 is the top of that level. 78.88 is the bottom of that area. That is on John Deere, ticker symbol DE. To the upside out here, let me see, as this thing has come off of the bottom out here. Nice sign of strength out here on October 14th. Good price spread, good volume out there. Another nice little sign of strength out here on November 6th, 5.4 million shares to the upside. That was on November the 6th. So John Deere truly is trying to change its trend out here. We just have to be cautious and recognize that October 8th swing point. If the market is going to reverse course here over the course of the next few days, whatever it might be, and John Deere could easily go down and test that level. Again, ticker symbol DE out here. Let's take a look at. Let me see here. What can we look at? Anadarko Petroleum. Let's go take a look at APC. See what it is doing. Well, it's trading down just slightly this morning, down at 88.93 off $1 and some change out here. This thing. How about this? Now this is not too shabby out here. Take a look at what Anadarko Petroleum has done thus far. Now, this thing I don't know what was behind this move, but it's one heck of a move out here. And that was from the trading session on April 3rd. You want to talk about wide price spread and accelerated volume. Well, Anadarko Petroleum has it. This thing on that one trading session went from that's a wide-ranging bar, that's for sure. 85.95 was the low there. The actual open was 86.63. During the day, it got up to $100 even Steven out there, and there was volume of 44 million shares. Now, remember, when you take a look at a breakout like that, you got to pull back a couple of candle sessions to look for support. Well, what this actually did was it came all the way back to the swing point low from March 14th, and that low was 81.42. Now, volume there was 3.1 million shares. As it pulled back, there was 12 million shares. But remember, you're really going against that 44 million shares. So that's some pretty good support for Anadarko Petroleum. Come on, grab that. There we go. That's down at the price level of about 81.42 out here. So if it does pull back into that area, what you'd actually like to see, you'd like to see it pull back in that area another time, and then pull back with less than 12 million shares out there. Yes, your benchmark is at 44 million shares, but now you've got this other swing point down here from October 15th. You'd like to see that area hold. Anadarko Petroleum. No other reasons other than that sign of strength for this thing to move up to its highs out here. No high volume high or anything along those lines out there, but may be worthwhile to pay attention to. APC, again, is the ticker symbol out there. Let's look at, let's go look at some of the gold stocks out here, see what they are doing this morning. So you've got gold is down $1, no big deal. Platinum's up $14. Let's take a look at ticker symbol GOLD, Rand Gold Resources, down 88 cents. If we take a look at what it did on Friday, a nice acceleration move out here. The volume behind that move on Friday was 1.3 million shares. That was taking out swing points that had 1.5 and 1.3 million shares. So, decent volume. Not anything necessarily to float your skirt. It is in full bullish formation, though, above market profile highs. This really it did it for a time period here, just for a couple of days. And that was back on the October 13th time frame, October 16th out here, where we saw price in essence close above its market profile high. In this case here, it's well above that market profile high out here. So Rand Gold Resources, what does Rand Gold Resources want to do? Well, a couple of things. One, if you just simply take a look at retracements, we go from the high out here down to the low. What Rand Gold Resources should be doing, well, first, on its way to the dead cat bounce of 0.382 retracement. That's $70.18 out there. But more likely, it ought to at least get up to 77.71. Of course, if it's doing that, and if gold is putting in a bottom, the U.S. dollar index putting in a top out there, more likely your target becomes your swing point at 89.89 out there. You got to take things one day at a time, but a nice move. The back off inside Rand Gold this morning, no big deal, at least not yet. If we take a look at ticker symbol GG, which is Gold Corp, that's up a nickel this morning. Of course, Gold Corp is the number one holding inside of the GDX out there with a pretty decent percentage weighting. Now, in this case here, Gold Corp is kind of weaker, certainly weaker than Rand Gold Resources. Had a decent day, most certainly on Friday, but that decent day going against that how do I politely put it, vomiting session, I suppose, and if that is even polite out there. But it's going against that October 30th day, 21 million shares the downside versus 12 million shares the upside. Also, if we take a look at Gold Corp, has not gotten to resistance, which was old support, or should have been old support of its market profile out here. That has yet to be tested, $20.93. It would do itself justice to get above that. That also happens to be above 20.91, which is the high of October 30th out there. This ought to at least go close the gap. October 29th's low, 21.42. Repairing that window would do itself justice in telling you that the bullish move inside of the GDX, the HUI, the XAU, inside the gold market would be very helpful for those indexes and the ETF structures out there, just because of its weighting structure. Let's take a look at ABX out here, Barrick Gold. Let's go see what it is doing. It too being a significant weighting inside of the GDX. It's got the if we take a look at its gap down from October 30th, 33 million shares. Friday was up with 17 million shares out there. So gold had a nice strong day, as you can see. The GDX had a decent day as well. Many of the miners did. But if you start going through and taking a look at each of the equities out here, some are stronger than others. Not all were created equal inside of the mining sector out there. Nonetheless, what Barrick Gold was able to do was to close above its market profile high. And this morning so far, what it's doing is it's testing that level. So everything is really just waiting for the king, the U.S. dollar index, to start pulling back out here. And at this stage, that hasn't happened. And that's courtesy of your queen, the euro. This is Steve Rhodes with TFNN. Dow is off 14. That's down. You're ready.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 11, S&P down a couple of points right now, and I am throwing a party this coming Saturday, November the 22nd out there, and you're invited to join me. It's going to be a 3-hour work session where I'm going to be teaching you just really the best patterns that are out there. I'll teach you about technical analysis, buying and selling the D point, the nuances there, and there are some nuances. It's about really being able to master that C to D leg. It's about about being able to understand how the market communicates to you. It's about taking a look at my best momentum patterns that are out there for you to be able to identify and add that to your trading arsenal. It doesn't matter really what time frame it is at your trade. So if you are a person that is trying to enhance, if you're trying to learn, if you're trying to grow out there, and I hope that each of you are always doing those things. And when it comes to technical skills, this is absolutely, I put on a number of programs here at TFNN. I very much impassioned about what it is that I do. That's probably the biggest understatement out there. And if you're really trying to take your game to the next level, now this is the coolest thing because we've made this into a 7-week course. So we split it up into 2 3-hour programs, one on a Saturday. Now, I know many of you have activities, just as I'd have activities on a Saturday out there, but we thought it would be best for folks to be able to have that opportunity to, that don't have to deal with work, could attend live. We're keeping it short and sweet. That means from 9 to 12. So that means you're going to, in order for me to provide you with the best of the best, I have to get right down to it. Here's what you need to focus on. Now, that doesn't mean if I do a one-day thing. It means in a one-day, an 8-hour time period, we've got more time to give you, maybe more information about it. This is really, really cutting to the chase. So if you're the type of person that wants to be able to cut to the chase, just tell me what it is that I need to know so I can take my trading game, to that so-called next level out there. Then this Friday is the place or this Saturday is the place to do it. So homepage at TFNN.com. It's $395 to sign up for the course. You consider what you're going to get out there. That is so worth the value. And then it's 7 weeks worth of follow-up. So I'm going to be teaching you about patterns. I'll be showing you those patterns on a weekly basis for you to follow. We'll follow some very specific instruments out there. We'll also take a look at other patterns that might be setting up elsewhere. And then we're going to reconvene some live trading on Friday, and that's going to be January 9th after we get back from the holidays out there. Again, all this stuff is archived on your workshop, so come on over to the homepage at TFNN.com. If you are the type of person that wants to grow and has got the same kind of curiosity and interest in just simply the best patterns, I only wish, this is how I put my courses together, if at any stage of trading, certainly in the early stages, I wish I would have had somebody come to me and say, this is I would love to take my own course out there. It's really that simple out there. In any event, what is it that we want to focus on today here? I'd have to say, take a look at the VIX index. Right now, the VIX is up a buck. It's up 8% out here this morning. If we take a look at what the VIX is actually doing, it's trying to get its way up into that 50-day exponential moving average. That price point is 15.17. You're at 14.39 as we speak right now. If the VIX closes above the 50-day exponential moving average, well, the last time that we saw a VIX index close above the 50-day exponential moving average, that was on September 22nd. Of course, that then went to those higher highs. Anytime the VIX is above the 50-day exponential moving average, that's where you start to see some real carnage in the marketplace. Now, today is an example. If it gets above 15.17, we'll probably have a one-day rate of change in excess of 10%. That would say we would see a bounce tomorrow or the next day, but most likely tomorrow out there. But pay attention to that, and there'll be a couple other things to pay attention to. We'll cover that during the second hour of the Trader's Edge. If you're off to start your day, thanks so much for joining us here, and have a great trading day, a great work day, a great any kind of Monday, a magical Monday. I look forward to seeing you bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.